Good morning, this is the latest market news. I am Uliana. The Australian jobs report for September was the major focus for Asia, and what a shock it was, but this time to the upside. Markets were expecting a small rebound from August's poor 8,800 jobs lost, but were surprised when it was relieved and that 14,500 jobs had been added in September. Moreover, a full 32,100 full-time jobs had been added, with 17,700 jobs lost in the part-time sector, resulting in relatively solid release, even though it does not remain a volatile series. Knee-jerk reaction to the headline saw Australian dollar trade 20 points higher, but the details ensured we continued to the edge higher for the rest of the session. At the start of the session, Euro-US dollar had been knocked back when S&P downgraded Spain's rating 2 notches to BBB-, one above junk, citing increasing economic and political risks. So Asia started the session with Euro-US dollar unchanged from yesterday's levels. We saw a mixed set of data from New Zealand. September's PMI improved to 48.2 from 47.4, though still below 50 for the third straight month, while consumer confidence slid for the second month, falling 1.3% on month, with households' 12-month view on the economy holding steady at -7. From Japan, core machinery orders fell 3.3% from a month ago after rising 4.6% in July, and underscores the increasing risk of lower growth in Q3. Also highlighted with the Bank of Japan's downgrade of its economic assessment at the last meeting. Minutes of that meeting were released today and showed that only one member advocated increasing the size of the bank's asset purchases, while another warned that the company faces stagnant or very limited growth in the near term. We've got a wave of CPI releases in the Eurozone today, starting with Germany. The US jobless number is out later in the day, in addition to the US Department of Agriculture's latest WASDE report. US jobless claims are expected to inch higher in the 7th day to October 6 compared to the previous week, signaling continued weakness in the jobs market. The number of jobless claims is forecast to total 370,000 compared to 360,000 last week. Last week's fall in unemployment suggested an unexpected lift to labor markets. The Fed's latest Beige Book out yesterday said that while employment conditions were little changed since the last report, several districts reported shortages of highly skilled workers, and that a few districts and firms were starting to increase training programs to meet their staffing needs. It was the latest market news provided by ICO FX. Goodbye.